So it's pretty clear that the stock market crash of the past couple of months has severely accelerated over the past week or so, as we've seen the NASDAQ, the S&P 500, and obviously the Russell 2000 indices basically become a crash fest. I mean, it's been pretty clear over the past few months that a lot of growth stocks have gotten hit, but now it seems like big cap stocks in the software, the technology, and the banking space have also joined this very severe sell-off. As a matter of fact, today the NASDAQ hit its worst day since 2020 and officially hit its 66th correction since 1971. And extremely surprisingly, this sell-off has also extended itself to Bitcoin and crypto, as we've seen Bitcoin finally slip below that crucial $39,000 level. Now you guys already know my take on this, which I've made very clear on this channel, which is that I keep buying the dip as the market goes down. And in the short term, this stock market right now is completely random. This market is clearly disconnected from the company's fundamentals, and as a result, looking for instant gratification after you buy a stock that's fallen 30 to 40% over the past month or so is not really going to work out. We don't really know when the bottom is going to come, but in this video, I'm going to share some tips and tricks that you guys can use to find the bottom and share my thoughts on what the macroeconomic outlook could look like for our favorite growth stocks. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. I want to start off by addressing the big elephant in the room, which is the extremely aggressive selling we've seen in stocks over the past few trading days. We obviously had Peloton come out with their halting for their production, which caused that stock to drop around 25%. And then during the same day, we had Netflix come out with their earnings, which are a pretty big disappointment, especially for Wall Street, that sent that stock down around 25% in after hours. But the very important thing that a lot of investors and traders are looking over is the big and massive option expiration pool we had this Friday. As you guys can see, around $3.3 trillion worth of options expired in a single trading day, which is by far one of the largest option expiration pools we've had over the past couple of years. It's pretty obvious that a lot of people have likely been buying calls as they keep on buying the dip. And as we all know, whenever you're buying a call option, on the other side of that trade, there's going to be a market maker who is most likely a bank or a hedge fund. And as we all know, it's these hedge funds' job to make sure that these options expire worthless, which is why they control the stock price to make sure that these options expire worthless for whoever is holding them. And unfortunately, I'm seeing a lot of people panic because they're seeing these stocks go down, even though there really is no reason to panic. Now, if you buy a stock in a normal market and your stock has been going down for 3 to 4 months, there's a high chance you might be making a bad decision or the fundamentals of the company have probably deteriorated. But in this case, basically every single growth stock has been selling off regardless of its earnings, regardless of its news, or regardless of how strong the balance sheet of that company is. And because of that, I don't think right now is the time to panic sell your stocks. Instead, right now is one of the best times to invest in the market. And even from a macroeconomic point of view, there are some reasons to be bullish for 2022, which is why personally I've been buying the dip slowly as my stocks have been going down. The first thing is that we're seeing the S&P 500 and the NASDAQ actually start to sell off, which means that we could see some government intervention to potentially move the stock market back up. Now, I know this is a little bit of a stretch, but this is something we saw happen in 2020 under Donald Trump, where basically he wanted the stock market to perform very well. And as a result, he obviously pumped quite a lot of stimulus into the economy and forced the Treasury and the Federal Reserve to make sure that the economy thrives. Now, I don't know what Joe Biden's plan is going to be, but I think Joe Biden might be following a similar prospect, especially since 2022 is such a critical election year for the Democrats. Over the past couple of months, we've simply seen the small caps and the Russell 2000 sell off aggressively, but over the past few weeks, we started to see the NASDAQ and the big indices of the American stock market also sell off. And so in my opinion, that could be a pretty big signal for the Federal Reserve and the government to potentially take some action and increase economic growth. The second big factor that could also be hinting at a potentially good 2022, especially going into the summer and at the end of the year, is the fact that we're going into this fifth stage of the growth stock cycle. The first stage of this growth stock cycle that we've seen over the past couple of years was obviously the economic stimulus that we saw pump into the market after March 2020 and after the recession. We saw very low interest rates and we saw a lot of money pump into the market, which obviously rallied a lot of growth stocks. We saw that rally from around March 2020 up to January of 2021 until when we saw inflation actually inflect very high. When the CPI report came out in February 2021, we saw basically every single growth stock sell off very aggressively. And as we all know, the market has not stayed the same since. If you simply look at the inflation data over the past year or so, it's been a very consistent trend to the upside ever since January and February. And obviously, if you also look at any other growth stock in the market, the growth stocks have been selling off the exact opposite way. And so what this tells me that inflation is somehow linked to growth stocks, which tells me that if inflation starts peaking and we see an inflection point, we could start seeing a rotation back in the growth stocks. And as we all know, the next stage after this Fed taper and interest rate announcement is going to be the actual hiking of interest rates. And so when interest rates start to go up, potentially starting March, and inflation starts to inflect down, what are we going to see happen with growth stocks? And the reason why I'm bullish is because historically, as we've seen over the past year, the market hates inflation. So in my opinion, now that the Fed is taking action to fight inflation, we should start seeing a rally in small caps because historically that is what the correlation has been. Out of the 5 stages of the growth stock cycle, we've seen only one rally, which was back in 2020 with all the stimulus and the low interest rate environment. But now that inflation took over in 2021, we saw this major correlation between the way that interest rates went up and the way that growth stocks went down. And so in my opinion, once we see interest rates go up and this potential inflection point in inflation, growth stocks should definitely see a lot of volume and a lot of bullish sentiment. Because unlike what many people think, we're not in a recession right now, so it would not make sense for growth stocks to continue selling off after this 5th stage. On top of that, if you look at the IWM index, which essentially tracks all the small caps in the market, we've seen this very aggressive selling off over the past month or so, which is basically a signal of a market crash. As you guys can see, ever since inflation took the headlines at the start of 2021, we basically saw this extreme consolidation for the entire year. This right here is the phase where we saw the insane amount of stimulus, which is the first stage of the growth stock cycle. And obviously this right here is the second and third stage of that growth stock cycle. But now what we've entered is the 4th stage of the growth stock cycle, which is when the Fed announced their taper and their plans to heighten interest rates. The fears of inflation essentially halted this massive rally that we saw in 2020, which is why the increasing of interest rates could actually be a sell the hype, buy the news kind of event. Hedge funds and managers are basically selling and liquidating all their positions in anticipation of this rate hike, which in itself is not expected to be that much. But technically speaking, if you look at the IWM, we broke below this $208 support level. So for me, the critical levels that I'm looking at for the IWM index to potentially bottom are this $190 support level, followed by this potential reversal all the way down to this $165 to $170 region. And this $165 to $170 region is going to be pretty important because it was clearly a historical resistance level. And as you guys can also see, that was right where we formed this very big gap after the election was decided in November of 2020. And it's a very similar story over at XPEV, which is the biotech ETF of the S&P 500, which has essentially been in a bear market for the past 9 months. The RSI for this XPEV index is now trading at 26, which is essentially the same RSI that we traded at in March 2020, and obviously the 2018 market crash. And so what this tells me that right now we're basically in a market crash in itself, and the market crash is much closer to a bottom than it is to a top. And so for me, you really want to be looking for buying opportunities right now instead of maybe selling your stock or going short. Because as we all know, the market will turn around on a dime, and it will turn around when people least expect it. And as for some of the big market moving catalysts that I want to keep on watch over the next month, they include the January 26th Jerome Powell FOMC meeting, which is coming up next week, the February 10th CPI data report for January, and obviously the March 15th FOMC meeting where we expect Jerome Powell and the Federal Reserve Board to raise interest rates. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys are doing during this market crash and what stocks you guys are personally buying on these dips. But anyways guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.